And now, unbiased and independent, here is your Manhattan Weekly Market Report with Noah and John from UrbanDigs. Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday, so you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply for Manhattan, 7,501 things. Show me that chart.
Yeah, again, with supply, no changes here. We are down nearly 1%, and we are on trend almost exactly with where we were last year. And the shape of that curve is following exactly as it was in 2020, 2019. So supply kind of remains the same. The story remains the same on that side. It's just a lot lighter than you would expect it to be.
Yeah, there's a ceiling on supply, and there's no macro stress in supply, and that's the key takeaway here. If there was, you would see supply rising, not falling right now when it seasonally is supposed to fall down. Johnny, let's move over to the measure of demand. Pending sales, 2,584 things in contract. Show me that chart.
Yeah, here we are. Reset still in play, down 0.7%. So getting closer. We're getting very close to those 2019, 2020 lines there. No, and I don't know if there's some magic that's going to happen, once we do cross them. But, you would expect this number to sort of even out at some point here. We're not quite there, though, yet.
Yeah, I mean, we're only recently starting to see deal volume tick up, and that tick up has been underwhelming. It should have been more of a tick up, so we're trending below historical trends. So this down slope, it's not gonna turn on a dime. It's gonna take some time to see that bottom formation. It's like watching a slow freight train just pass by. It's not gonna do anything quick until we see deal volume rise over that historical trend, which we are not seeing any signs of yet. And as a result of supply and demand, we're seeing that market pulse just hover in this buy-side territory, this buyer's market territory, right around the 34, 35 level, Johnny. Let's go to the weeklies, see if there's anything going on there, any clues. I'm looking at supply, 1 week, 283 things, ticking up slightly. Show me that chart.
Yeah, it's up nearly 3.5% or so on the week. But this is what supply kind of does. I mean, the overall trend, it remains down. You're going to have little oscillations. It's going to go pop up, pop back down. So this is an up week, but you can see that it's really none of these lines. They're all very tight. The supply in this period of the year is it's a known quantity. So we are well within the bounds here, Noah.
Right. It's just not much to talk about. Let's go take a look at 1 week contract signed. That looks like it's ticking up as well, but it's not a meaningful tick up, only about 4%, it looks like. 185 things signed last week. Johnny, show me that chart.
And we're at 185 things signed this week. So we got an extra contract in there, but again, it's not that much. And we're still below the trend lines that we'd like to see, certainly well below 2021. Again, that was just kind of gangbusters. It's still below 2019, still below 2020. Honestly, not by much here, Noah. But when you look at the right end of that chart, those lines start sagging down as you get into the new year. So it'd be nice to get some deals, under the waist belt by the time the new year rolls around.
Well, you got a little bit of a rally going on in Wall Street. Maybe that terminal rate is peaked out. We've talked about that Fed terminal rate. It was over 5 a little while ago, and now with that CPI print, it's coming below. It's like 4.8, 4.9, and that is enough to fuel a bear market rally in equities. I don't know if that's going to translate into a pickup in bid activity for us. But you know what, Johnny? I just want to point something out. When I switch to the 1 month, ticker, which is that's my go-to. We're over the 800 level now. All right, We've been in the 700s for a long time. We're finally, I don't know if we're going to stay there. I don't know how far we're going to go, but this number is supposed to be around 880 or so for this month. We're at 821. This is the transactional market. This is a transactional market.
You're right. It's transacting. It's a little bit slow, maybe on about 10% or so slower, but it's within the range of what you would expect for a seasonal market. It's just on the slower side of things.
Yeah, I mean, this was at 600 a few months ago, and we're slowly coming back. So, like when we say the bids are starting to come back, and we're seeing activity right below that average trend line. We're not seeing it well below, and we are coming back. So these are things you have to kind of look at and take into account. And everyone's just fixated on pricing. How much are we down? And I can't say this over and over. I can't say it enough. It's going to take 4 to 6 months to fully reveal what we have already experienced. So if you want to know where we're at right now, this is the closest data I have. This is Q4 sales data. Now, I will tell you that Q2 to Q3, Johnny, last quarter, not this, last quarter, we fell about 6-7% in average sales price and about 2% in price per square foot. This quarter, Q3 to Q4, we're down about 4% to 7% in average and median sales price, and we're down 1% in average price, and we're up 1% in price per square foot. So it's almost like at a price per square foot level, the pace of decline is stalling, and we're not falling as much. We weren't even falling that much to begin with. On a sales price level, we're falling the exact same level that we fell last quarter. So to put this all into perspective, where do I think we are now? First off, this is like a slow bleed. Quarter to quarter slow bleed. We're 2 quarters into it. Q3 was the first one. Q4 is the current second one ongoing. And if I had to add all these up right now, we're probably down 5 to 9%, 6 to 10%. And we still have Q1 that is booked that has to come through. That's probably going to also be down just a couple of percent. So that's what I see in terms of price action.
Yeah, and don't forget that as we go forward, we're going to be comparing, as you said, Q1, Q2, we're going to be comparing those to sort of the peak Q1, Q2 from this year, from 2022. And to go back to your freight train analogy, right? I mean, it is this slow lumbering freight train. I guess the Dylan fans know that it takes a lot to laugh, takes a train to cry. And as that train comes rumbling through, right, you're gonna see these minor declines as we roll forward here.
Yeah, and that's the point. But you know what? Supply is starting to top out and come in. Demand is starting to come back closer and closer to that average line. Granted, we're much lower than where we were before. Everyone knows that. And those forces interact together might tell me that, again, this shift has mostly happened, and we're just sitting and hovering around this new lower level. And if we are falling, it's probably a minor active decline. It's not a serious, significant decline that already happened in June, July, August, and September. Okay. That's the point of this whole story here. Johnny, thank you so much for pulling up all that data. It is so helpful to see all this. I am Noah Rosenblatt. We're both from UrbanDigs. And don't forget, you guys got questions, we got answers. Please visit our forum right down here. If you want any of the reports that John has whipped up, please just visit right over here in just a little while. If you guys need to help us close a deal or any kind of custom data, you contact support@urbandigs.com, and the UrbanDigs Advisory could potentially help you. Other than that, this has been your Manhattan Weekly Market Update, and we'll catch you next time.